Let's talk about the biggest IPO coming tomorrow. Life insurance company, most commonly known as LIC, will list on stock exchanges. And despite volatile market, government went ahead with the IPO and raised almost 20,557 crore by selling 3.5% stake in the company. IPO has got a strong thumbs up by the policyholders and small investors. But tomorrow is the big day, and the big question here is what to expect on the listing day. As a retail investor, what should be your strategy when it comes to your IPO lot, if you get one? And if you are one of those few who didn't get it, then should you enter in on the debut day? To discuss all of this, let's welcome Aditya Shah of JST Investment, who has been helping our viewers since a while now on this topic. And obviously, he will explain us how to look at the LIC IPO and what points to keep in mind. Welcome, Aditya, on this show. First question, what is your analysis of the IPO listing tomorrow?
Good evening, Kavitaji. We have seen the markets being volatile across the last 2 weeks. We have seen central banks hiking rates and equity markets being very, very nervous. Grey market premium as well as our analysis shows that the IPO could list at a discount for normal shareholders. However, policyholders could be at an advantage where they have got to be 60 discount on top of the IPO price that is there. So I don't think there will be any handsome gains, any short-term gains that investors will get tomorrow. However, the IPO LIC is a long-term story. You will not make money on LIC in the short term. Anyone who is trying to punt on the IPO for the short term, I suggest that you stay away from the IPO. All those who are long-term investors, don't worry, even if you get a discount to your price tomorrow. It's a long-term story, as we will discuss later in the show, for about 2 to 3 years. And if the turnaround in the business does really come about, you will see spectacular gains from the company. So from near-term point of view, from tomorrow's point of view, expect a very, very cheaper listing. Expect even a discounted listing that is there. Short-term investors, please don't punt in the stock. The stock could go lower if the company does not perform. Long-term investors, there's nothing to worry about.
Interesting point that you've made, Aditya. You're telling us that it's a long-term story. Now, what about those investors? I'm not talking from the personal finance point of view, where we look at the portfolio and in that we look at the IPO allocation. I'm talking about retail investors who just wanted listing gains. Now, what according to you would be a shock for them, and what would be the strategy for them now?
Our analysis shows that anywhere between 5 to 10% on the discount side of it, the IPO could get listed. I had warned multiple times that since it is a very big IPO, you will not get a listing pop that is there, because mostly everyone has got at least one lot in their allocations that is there. You get a listing pop when there is a shortage of shares and there's a huge demand that is there. So that's not the case. I expect 5 to 10% loss on the discounted on the IPO price that is there. My advice would be, since if your horizon is at about 1.5 years, you should not stay in the stock and you should exit the stock even if it is at a discount. However, if you have a 3-year time horizon, I will definitely tell you that you stay put in the stock, and at some point in time during the next 3 or 6 months, you can also look to add on the stock. However, tomorrow and in the next 3 to 6 days, there will be a lot of euphoria on the stock. So I will suggest no short-term investors to take any punt either ways on the stock.
Again, now I want to understand what if you want to enter the stock after the listing? What should be the level? And as you just mentioned, there's going to be a euphoria for a couple of months after the listing also. And if you want to invest, if you want to put in your money, you need to be a long-term investor with a view of at least 3 years. What should be the level, and what should be your criteria to enter a stock like LIC, or for that matter, if you talk about insurance sector per se?
Or say, this price is a good price to start 1% portfolio allocation. Anywhere between 700 to 800, the stock is very good value. Point number one. Point number two, we have seen LIC's business metrics are weaker than all other life insurers. For example, the margins that they make on every new policy sold is at 9%, whereas all other private insurers make 25 to 30% of their margins or margins on new policies that are sold. So what is the key business metric that you need to track in order to increase the allocation to LIC? Point number one, there should be a turnaround in the business. A turnaround in the sense LIC should start selling a lot of products which are very profitable for them. If they start to do that, I assure all retail investors that 1.1 times embedded value will turn around to 2.5 to 3 times embedded value, and LIC will become a huge wealth creator. So what you need to do is you need to track what are the margins that the company is making over the next 3 to 6 months. If slowly from 9% margins, the company is able to go towards 15%, you will surely see a valuation re-rating anywhere between 7 to 800. The stock is very good to add, and as the turnaround will happen, the market will automatically re-rate the stock. So don't get carried away tomorrow. Wait, be patient. Look at the results over the next 3 6 months. Look at the turnaround. Look at the value of new business margins or the margins. Look at the premium growth that the company is reporting. If the premium growth is good, then again the market will re-rate the stock that is there. Look at the persistency ratio. It means how many policyholders are renewing the policy. If these three parameters are starting to improve, you will make a lot of money on LIC that is there. So tomorrow, don't worry about it. Even if it is at a discount, look at 700 or 800 value price at which you can add, and then wait on and monitor the results on these three parameters that are there.
About euphoria that you mentioned earlier, if you could just elaborate on that point, why do you think the euphoria is going to be there around this stock for a couple of weeks?
See, it's very simple. Since it is a very big company that is there, it manages about 45 lakh crores of AUM that is there. And the second point is it's one of the biggest IPOs that has come about. So everybody's talking about it. So a lot of euphoria is there. What will happen to LIC? What will happen to LIC? So from that point of view, all retail investors wanted to get allocation on that stock that is there. However, on the business metric side of it, when we analyze the business, we find that although it is number one player with 65% market share in the life insurance space, the business metrics of the company are really not at par with some of the leading private insurers that are there. So from a stock market point of view, we see everybody talking about LIC. That's the euphoria that is there. On the business side of it, the company has long way to go. So in my view, the weaknesses of LIC are the sole strengths. They can become strengths for the company over the period of next 3 to 6 months that is there, and we need to monitor that.
Listed life insurance company and LIC, let's talk about that. Can you differentiate on basis of few parameters as to why the other companies are better than LIC?
Let's talk about HDFC Life. HDFC Life trades at about 3.5 times embedded value, whereas LIC IPO is priced at about 1.1 times embedded value. Very simple reason for this differentiation in valuation. LIC makes only 9 rupees on every 100 rupees on. However, HDFC Life makes 26 to 27 rupees on every 100 rupees of premium earned that is there. So there's a wide difference in the margins that is there. There's vast difference in the persistency ratios. So what do I mean by persistency ratios? How many people are constantly renewing their policies? And you will find after 5 years, LIC's persistency ratios are very poor. They're in the range of 60%, whereas HDFC Life, the second market leader that is there, it makes about 70% persistency ratios that are there. Then if we talk about the growth of new premiums that is there, you will find LIC's growth of new premium is at about single digit, whereas HDFC Life grows at about 25 to 30% on their new premiums. So there is a slow business performance from LIC, but the management has promised that over the period of next 3 years, they will change all of this and LIC will transform itself to compete with all other private life insurers that is there. So if we go by that, 3 years down the line, we can expect a good valuation re-rating. However, we have seen with all PSU companies, they tend to take their own time to deliver performance. So that is why I am saying, as the performance comes in, start to ramp up your allocations then. Tomorrow, just because it is the market leader and you cannot ignore the stock, have a little bit of allocation. And then as time goes on, evaluate your position and then see whether to add or not to add to the stock.
Sure. So now let's talk about your IPO allocation on a portfolio level. We know a lot of people who invest in stocks, mutual funds, different investment avenues. Now they also keep separate money to invest in an IPO. What, according to you, should be a criteria to invest in IPO, and which are the IPOs that now you are looking forward at?
It's very simple. I call IPOs that it's probably overpriced. In my opinion, most of the IPOs that came in 2021 was significantly overpriced. One of the first IPOs where at least the government has left some value on the table is the LIC IPO. On the LIC IPO, the valuation is good. We just need to wait on the valuation re-rating that is there. Over the period of over this 2022, we have seen companies like Delivery. Delivery has good business performance that is there. It is solving problem of e-commerce players of providing a complete delivery solution to all e-commerce players that is there. So that's a good company that is there. However, when you look at it, it's a loss-making company. They're trying to turn around the business. However, that will take certain amount of time. If they are able to turn around the business, they will become a huge wealth creator from here. Similar is the case with LIC. Again, business turnaround, they will make huge wealth from here. So my point of view is have a little bit of only 1% of your allocation of your total portfolio to IPOs. And within that 1% allocation for companies like LIC, invest about 10% right now and wait on and watch for the results to come out. High risk investors can invest in companies like Delivery, which are doing very good job in their own field that is there. However, there is a problem that they are not profitable. Once they start to improve their business metrics, you can allocate more and more. However, major part of your portfolio should be towards mutual funds or with a fund manager who knows what he's doing.
All right. So just to sum it up in a nutshell, as per our expert, Aditya Shah, the listing can be on a discounted price. So all you have to do is just increase your time horizon and maybe just be there in the stock for 3 more years if you want real gains out of this investment of yours. Thank you so much, Aditya, for removing time and giving this analysis for tomorrow's LIC listing.